Micron dropped 13.2%, and everyone is panicking. Micron just qualified for Nvidia's H100 servers, securing critical 12-gigabit DRAM sales. Revoking export licenses for 12-gigabit DRAM would erase China revenue, but the H100 qualification locks in global demand. But the lab score is 71 out of 100. Why? Here's why the sell-off is wrong. Pre-market, MU just surged 5% on earnings before the open. Micron reported a massive EPS beat of $12.20 against the $9.58 estimate, with revenue hitting $30.39 billion. However, Micron's hardware position remains a liability because they are chasing SK Hynix's lead in HBM3E, high-bandwidth memory using 3D, TSV, or through silicon vias to stack dies for 1.2 terabytes per second of throughput. The engineering reality is a yield bottleneck at the 1-beta node, Micron's latest process generation. This architectural choice limits their ability to scale 24-gigabit stacks compared to the competition's 3nm roadmap. If Micron cannot solve the 3D, TSV packaging heat wall, they lose the Nvidia H100 socket regardless of this beat. Rally ignores the physical constraints of the silicon. Quarterly financials showing modest revenue momentum for Micron. By Q4 2026, tightening U.S. export controls will compress Micron's China revenue by $300 million as licenses for high-density DRAM, memory that stores more than 12 gigabits per chip, effectively vanish for firms like Alibaba. The macro environment is a receding tide. While the Fed holds rates at 3.63%, the normalizing yield curve, the return to a state where long-term debt pays more than short-term, signals a transition from AI hype to industrial reality. With the 10-year yield at 4.51%, Micron's massive capex for the Utah fab depends on CHIPS Act subsidies that face political volatility. As trade war rhetoric escalates, any disruption to TSMC's advanced packaging flow in Taiwan turns Micron's booked-out 2025 capacity into a stranded asset. Micron reported earnings per share of $12.20, beating the Wall Street estimate of $9.58 by 27.3%, a solid beat that signals strong execution. Micron memory is trending higher at 1,051 points. Pre-market, MU just printed a 5% pop on earnings, and the press release screams, AI everywhere. That's the headline management wants. Strategic agreement with Anthropic, historic New York fab, Computex AI showcase. 3 words designed to make you feel the AI wave is unstoppable, and to make you forget inventory correction. Here's what the lab hears. Insiders net sold 160,000 shares in 90 days, a pattern that historically precedes a 15% pullback. R&D hit 10.2% of revenue, up 10.7% YOY. That's conviction, but Wall Street is front-running it. Needham just jacked their target to $1,550, yet ARK trimmed and short volume spiked 34.6%. The silicon reality? The momentum breakdown for Micron. RSI sits at 49, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bullish, with the histogram crossing above 0. Micron's qualification for Nvidia's H100 servers provides a massive revenue floor, but the bull case breaks if export licenses for 12-gigabit DRAM are revoked, gutting the China segment. While analysts raise targets to $1,500, firms like Capital World investors trimmed 28%, signaling cycle peak caution. The pro-level question: can Micron's packaging double bandwidth by 2025 without hitting a thermal wall? The labs and 15 calls were profitable, though our buy at $1,133 is currently underwater. With an AI score of 71, we stay long. If MU holds the $1,003 moving average, expect a run to $1,211 resistance. If it breaks $864 support, the cycle has peaked. Here's the macro picture shaping Micron. The Biden administration's export control rules now require a license for any Micron DRAM or HBM exceeding 12 gigabits shipped to China, directly limiting sales to Chinese cloud giants such as Alibaba and Baidu. In parallel, The CHIPS Act's $52 billion fab incentive fund is financing Micron's new 300mm plant in Utah, while rising tariffs on Chinese semiconductor imports and heightened U.S.-China tech war tension over Taiwan's TSMC fabs keep the supply chain fragile. AI-driven data center demand is pushing the market toward high-bandwidth memory, and Micron's 24GB DDR5 and 16GB HBM3E modules are now qualified for Nvidia's H100 and AMD's Instinct GPUs. The company's roadmap to 24GB HBM4 and its 3D TSV advanced packaging platform aim to double per stack bandwidth by 2025, cementing Micron's role in next-gen AI accelerators. The single biggest upside in the next quarter is Micron securing a multi-year, high-volume HBM3E supply contract with Nvidia for its upcoming AI inference servers, which could lift quarterly revenue by up to 7%. The greatest downside risk is a further tightening of U.S. export licenses that would bar shipments of greater than 12 gigabits drawn to China, potentially cutting the China segment by $300 million. MU's HBM3E yield just hit 92% on the 1 beta stack. That's the signal. Wall Street's still pricing it like a drawn play. Wrong. This is a high-bandwidth packaging margin story, not a commodity cycle. The lab ran the die maps. 12-layer HBM3E means MU's now the only supplier with both capacity and yield to feed Nvidia's Blackwell ramp. No one's talking about the 14% ASP uplift from the new interposer design. Have you traded MU before? Profit or lesson? Tell us in the comments. This isn't financial advice, just engineering-level analysis for education. Markets move fast. Past performance doesn't predict future results, and you should always do your own research before pulling the trigger. If you want our full breakdown on Nvidia, the link is in the description. Hit subscribe for the next deep dive. The lab's out.